Hi and welcome to this week ahead analysis video brought to you by Blueberry. Taking a look at the key data coming up this week, we have the UK claimant count change on Tuesday as well as Canada CPI, both data sets expected to come in lower than the previous. Then on Wednesday, we have US retail sales and an interest rate decision out of Canada. And then on Thursday, we have the ECB interest rate decision. It's important to note this week's going to be a shorter trading week. On Friday, we have global bank holidays. So the US market will be shut on Friday. Let's take a look at some charts then. So gold prices continue to soar. We've rebounded after we retested this 38.2 fib just below that $3,000 area before catapulting to the upside, and now we've broken into fresh highs, closing the week at $3,237.93, heading towards that 127 extension now, up at that $3,257 area. So really what we should be monitoring now on a sort of day-to-day basis, week-to-week basis, are those whole numbers, how they react to sort of 3,250, 3,300, etc, etc. This trend looks like it's going to continue. Last week we had the bond auction, which didn't particularly go well for the US bond markets, and it basically told us that no one wants to buy US debt at the moment, and that's a worrying sign. That's why we've seen this increased bullish nature of gold. You know, as soon as we had this drop in price, everyone was getting on that lower prices, and we can see by that kind of impulsive leg that we've had, that primary phase, that it just showed you that the market is still heavily invested in gold right now. So I think we see any kind of pullbacks in these markets, any kind of moves back down towards these kind of 3,100s, maybe this previous swing high, then buyers might step back in again. The only thing we have to be worried about here is if we do see escalations in terms of trade war between the US and China, and it leads to a sort of decrease in demand in stock markets. I think if we see a fresh sort of sell-off in stocks, gold will go with it, very similar to what happened here. The reason being is because they will need to liquidate their best performing assets to kind of help with any kind of liquidity issues. So they may sort of get out of these fresh gold positions. We may see price pump back again, and then maybe see that continuation. So we'll keep a close eye on gold prices going into this trading week. But gold, obviously, one of the best performing markets out there. That being said, how has the US dollar performed? Well, it's a weak currency for sure. We can see that we've seen that on euro dollar last week. Another strong weekly gain in the market for euro dollar, breaking above these 2023-2024 highs of 112 now, and we're heading up towards that 114.50 area. If we break above that, it opens the door up to the 122.50. This is a significant breach of a sort of long-term downward trend. Really, we've been sort of trending down since 2021. This shows a significant shift in that now. So dollar narrative, obviously very bearish. That's shown here by dollar Swiss as well, trading towards the 81 handle. Market has been very bearish here. We've actually fallen over 8.5% over the past 2 weeks, showing us how aggressive we are starting to see investors going into the Swiss franc now. So why is the Swiss franc getting a little bit stronger than the Japanese yen? If you were to kind of compare a dollar yen and a dollar Swiss chart together, you can see that actually dollar yen hasn't gone as far as dollar Swiss. And the reason being is because the Swiss National Bank are cutting rates. So usually in times of safe haven, they'll move money into a low interest rate market. Well, what's happening in Japan at the moment is they're on about hiking rates. And, you know, that means that they're going to be looking elsewhere. So the kind of lowest rate at the moment in terms of sort of G10, G7 currencies is the Swiss National Bank and Switzerland. So they're going to be pumping money into there when they flock to safety. That's why the Swiss is getting a good time at the moment. That being said, let's have a look at oil prices. Now, a factor of oil prices is lower oil prices, really good for Japan. Super good for Japan. In fact, you know, when you look at who imports oil and who exports oil, you know, we talked about this a little bit in the live streams last week. Exporters include the likes of the US, the likes of Canada, right? Importers include the likes of Japan. Japan, big importers of oil. So it's good for their trade deficits when oil prices go lower. Basically, cost of business, cost of exporting, cost of importing goes lower as business costs obviously come lower as well. So more margin to be made essentially. And we can see here that oil prices are still trading lower. The narrative haven't really changed. We did obviously have that Trump 90-day pause, which caused the oil price to drive back to the upside. Still trading below 62.50 at the moment. Ideally, I feel like if price went up towards $67, I think that would be met with some strong selling pressure here. Got that 50-day moving average there as well. But if we fail to kind of break through 62.50, then I still feel down oils is a little bit more of a good opportunity at the moment. I feel like this narrative here hasn't quite finished just yet. So if you enjoyed that analysis, please follow and subscribe for more.